Welcome to the deep dive. Today we're looking at a fascinating case study, a real calculated risk in the making. We're talking about Gabon.
Right.
This Central African country is in the middle of a massive regulatory shift. I mean, it's going from a very loose, kind of fragmented online gambling space to something that is super centralized and, frankly, very high cost.
And that's really the core of our analysis here. For this deep dive, we're pulling directly from our latest country report. Just, we're the Gambling Databases research team.
Right.
And our whole job is to deliver these in-depth analyses of the global iGaming landscape. So today, we're extracting the key insights on Gabon, the regulations, the taxes, the player experience, and really the conditions for operators.
And the goal is to give you a clear data-driven picture of how this really unique, really demanding market works.
Exactly.
Because the central question here is pretty intense. Why would a major operator even consider spending, say, over $1 million just in fixed costs to get into a relatively small market?
It's a puzzle. And Gabon's new framework is basically designed to formalize a sector that's been, dominated by offshore companies for a long time.
Okay, so let's unpack that financial and strategic puzzle.
First, to set the scene a little, Gabon isn't entirely new to regulated gambling. It's overseen by the Commission's superior de jure.
So there's a history here.
There is. Land-based is established. You've got 3 licensed casinos, a network of regulated sports betting shops. That's all been running under existing national laws. But the online framework is where everything is changing and changing fast.
And this is where it gets really interesting, right? The government's big reform, the e-tech initiative.
That's the one.
Which kicks off in 2025. And this isn't just a new rule book, it's a technical mandate. It says every single licensed operator has to integrate with Gabon's national gambling platform. No exceptions.
It's the operational choke point for the whole digital market. It really is. E-tech is, you could call it the mandatory financial spine of the system.
And it serves a few different functions, I gather.
It does. They're all interconnected, and they're all designed to maximize the state's control and, of course, revenue. First, it ensures total financial transparency.
Through transaction monitoring.
Centralized transaction monitoring.
Yeah.
Every deposit, every single bet, every payout, it all gets processed and verified by this one system.
Okay.
Second, it guarantees players get paid properly, which helps with trust issues from the offshore days. And third, it enforces modern responsible gambling tools.
Like age verification.
Age verification, real-time tracking for addiction risk. It requires this constant data sync between the operator and the government platform.
So walk us through what that means for an operator. They see this integration clause, they see the price tag. We've noted it's between $100 and $200,000 just for the setup. What are they actually paying for?
That cost is all about the technical side of things. I mean, this isn't just flipping a switch on an API. It's about meeting these really stringent data integrity standards.
So new hardware.
Often, yes. It can mandate specific government-certified hardware or even co-locating servers locally to interface directly with e-tech. That ensures, ultra-low latency and prevents anyone from tampering with the data.
So the money is for the certification, the physical gear, and the training.
And for training local IT staff who are certified to manage that interface. And the kicker is, if you fail to get this done by the October 2025 deadline, it's an immediate license suspension.
Wow, that's a hard line. Okay, let's move to the second big hurdle, which is the money, the financial obligations. This is where a lot of operators, I imagine, just hit a brick wall.
They do.
We're talking about an effective tax rate that could go over 50% of revenue. That just sounds almost unbelievable. How does that work?
It sounds punitive because it is, in a way. It's designed to hit profitability at 2 different layers. First, operators face a 30% gross gaming revenue tax, the GGR tax.
And GGR is basically turnover minus what you pay out in winnings.
Exactly. It's your gross profit from wagering. But then on top of that, whatever corporate profit is left over is hit with a 30% corporate income tax.
So wait, you're taxed on your gross profits, and then you're taxed again on your net profit.
That's it. So when you factor in your normal operating cost, marketing, salaries, all of that, the GGR tax already takes a huge bite. Then the CIT comes for what's left. Your net margins get squeezed down to almost nothing.
It's an environment where even if you have high revenue, your margins are just tiny.
Precisely.
And that's on top of these astronomical entry costs. We're projecting a minimum investment of, what, $700,000 up to $1.2 million.
That's the range. And that includes license fees, which are $250,000 on their own, plus that mandatory e-tech setup.
So you have huge fixed costs, a heavy tax burden, and here's the sticking point for me. A small market. The population is only about 2.6 million people.
And the current regulated market revenue is around $41 million. That's the core financial conflict our analysis really zeroed in on.
Hold on, 41 million is the current estimate. If the whole point of this is to formalize the market and push out all the gray market operators, doesn't that potential market number have to be way bigger?
That is exactly the strategic lens you have to look through. Yes, 41 million is tiny relative to the costs, but that number represents the currently visible market.
The stuff that's already regulated.
Right. The government is betting, and the big international operators are therefore also betting, that the unregulated shadow market is maybe 4 or 5 times that size.
So the huge price tag isn't for the market as it is today. It's a buy-in to control the future formalized market.
You got it. This steep price and the centralization, it's all acting as a massive filter. It locks out smaller local companies. It locks out most mid-sized regional players.
Which creates a first-mover advantage for the big guys.
It's a huge one. For the few well-capitalized operators who can afford that 5-year investment horizon, they're buying into what they project will become a, say, $150 to $200 million highly compliant market.
And that's why the ROI is so long. 36 to 48 months, minimum. You're essentially buying monopoly rights for being compliant.
That's the play.
Okay, let's shift over to the consumer side. Who is the Gabonese player? How do they fit into all of this?
The market is defined by 2 things: youth and connectivity. The median age is around 23 years old. It's a massive youth bulge,
So almost 60% of the population is under 25.
which means you have an inherently tech-savvy, digitally native customer base right from the start.
And the connectivity numbers are really impressive. We're seeing 72% internet penetration and 124% mobile penetration. What does 124% actually mean in practice?
It means it's a heavily mobile-first environment. A lot of users have dual SIM cards, or maybe they're using shared, low-cost feature phones. For an operator, it means optimization isn't just about a nice mobile site.
It's about raw efficiency.
Absolute efficiency, minimal data usage, fast loading on basic phones, and a transaction flow that's built for these little microsessions. And 90% of people live in urban centers like Libreville, which helps with targeting, but the interface has to be featherlight.
So what are they betting on?
The preferences are pretty clear. Sports betting is the leader, with 36% participation
Followed by the National Lottery.
at 38%.
Mhm.
And, culturally, European football is huge, the big leagues. But there's also really strong engagement with local and regional African competitions, which is important.
And user behavior follows that mobile pattern. Short, quick sessions.
Exactly. Spiking in the evenings and on weekends, which lines up perfectly with mobile money transaction times.
Okay, let's talk payments. You mentioned mobile money is strong. How does that work?
The main methods are mobile money wallets. Think Airtel Money and Move Money. They are the financial backbone for most people. But this brings us right back to that regulatory choke point we talked about. E-tech. It is mandated that all payment flows in and out have to be routed through the government's centralized platform.
Which guarantees tax collection, but it sounds like another layer of technical headache for every single transaction.
It is. Compliance isn't a checkbox you tick once.
Yeah.
It's your daily operational reality.
Yeah.
And beyond the tech itself, just the timeline to get up and running is a huge deterrent.
Yeah. What are we talking about there?
It's a high-friction environment from day one. We estimate 6 to 9 months just for the licensing approval. That's just the waiting period for them to vet your company.
And then you have to do the integration.
Then you need another 3 to 6 months for the mandatory e-tech integration and setting up all your local infrastructure. So you're looking at 9 to 12 months minimum just to be ready to operate.
And you have to have a full local presence.
A full local presence, dedicated Gabonese staff, a domestic bank account, which is mandatory for the e-tech interface to even work.
And then once you're finally live after a year of work, the challenges continue, especially with finding customers in such a small market.
Absolutely. Marketing is incredibly constrained. There are strict advertising restrictions.
Like no ads during the day.
A total ban during daytime hours when kids might be watching. A ban on any misleading claims about winning. And you have to have these responsible gambling messages on everything. Banners, notifications, you name it.
So in a market of only 2.5 million people, that has to drive your customer acquisition costs way up.
It does. It just lengthens that ROI period even further.
All of which I think confirms why our official rating for the operator ease score is a pretty tough 5.8 out of 10.
It perfectly captures the complexity, doesn't it? Our final verdict on Gabon is pretty blunt. It's a legal market, but it is extremely expensive, it's small, and it's heavily taxed.
So it's only suitable for a very specific type of operator.
Only for well-capitalized operators. We estimate you need at least $2 million in dedicated capital reserves and, crucially, a proven 5-year minimum investment horizon in these kinds of challenging emerging markets.
So what's the advice for a smaller or mid-sized firm that might be thinking about Central Africa?
They should absolutely avoid it. That initial $1.2 million buy-in, those fixed costs are just way too high relative to the $41 million market today. You can't justify that kind of spending without multi-year patient capital.
Which only the big international groups really have.
Exactly. Gabon is a strategic long-term play. It's not a market for quick growth or short-term returns.
So that mandatory centralization, the e-tech system, really is the main takeaway here. It's the government grabbing absolute control over the digital financial flow.
It is.
And given how aggressively they seem to be enforcing this, it raises a much bigger question for the whole continent, doesn't it? Is this centralized model for financial control and maximizing taxes, is this something we're likely to see copied by other emerging African markets trying to formalize their own digital economies?
That is the big strategic question that operators all across Africa need to be asking themselves right now. And they have to weigh those costs of compliance against the potential for that future formalized growth.
A fascinating, if challenging, picture.
It is. And we've given you the key insights on Gabon's unique environment today, all drawn from our deepest analysis. For the full text of this report and others, where we detail every aspect of regulations, player behavior, and operations, you can visit our website at gamblingdatabases.com.